And good evening, everybody. I'm Michael Filigera. I'm with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500, the ES, on Wednesday, January 21st, 2021. Market pretty much held to exactly what I was describing last night on yesterday's update, and except that we did not put in an additional new low below 4,110. However, the count still remains very valid, and that we are most likely in a B wave advance within a corrective intermediate wave 4. Now, again, expectations are for a larger pullback to take place. In fact, we're looking all the way down to here, but that just doesn't seem to be in the cards right now. So the fact that the S&P is having a rather shallow pullback suggests that there's still quite a bit of upside, and the momentum remains to buy the market versus sell the market. But we're going to let the market work all of that out and really go with what we see and what we expect from here. We'll worry about degree later. But right now, with this structure as it stands, it appears that we have finished wave A of this fourth wave correction, and that we may be in the finishing stages of the B wave, which would suggest that we are going to turn and go down fairly strongly, but back to the area of these lows, maybe a little bit lower, to complete the entire cycle. And that would be a C wave. So it's an ABC corrective cycle, and it's going to be labeled as a wave 4, whether it's going to be the intermediate level or some other level yet to be worked out, but that's what I'm looking at right now. So for tomorrow, we've already reached a pretty high level for the B wave within this structure. Now, the capabilities of this wave would be that it could get closer to the all-time high of 4,183.50. But we're going to have resistance here at 4,167. We're going to have resistance at 4,069, so that's going to be a zone. Actually, 4,072 or 4,073 down to that lower level. We can call it 67. So 73 to 67, that could be a zone. And then, of course, closer up to those highs. I'm not looking for it to exceed the highs. It may just pop its nose above it and then come back down, but I'm not expecting a break here that's going to just continue a buying push. And then what I would expect after that is for the C wave to decline, come back into here. C wave will drop in 5 waves. So it's be 1 down, 2 up, 3 down, 4 up, 5 down. And that should only bring us back to here. It's going to resemble this. So in terms of, 1, 2, 3, 4, 5. And then we're going to resume the larger route. So let's see how this all plays out. That's my expectation for right now. And it would be that resulting additional rally once we come back down, that I would expect the highs to break. Now, alternately, if the highs do get broken, and I mean with a push that's going to break it and start bringing it towards 4,200, that would be the next level. And then we have 4,011, 4,028, and then we have to go to additional Fibonacci numbers that suggest all the way possibly up to 4,300. Right now, I don't see that. Right now, I think if we poke our heads above it, it's going to get stuck. And we'll go from there just to see exactly where this fits in that larger count. But right now, we're going to put limitations on that. If a break does occur and it pushes, I'm going to expect that at least it's going to get up to 4,200, but that's going to be on a strong break. Otherwise, I'm looking for a decline back to here. We continue to have earnings, and they're going to start to come out more on the bigger, the bigger players, the larger companies are going to begin to report it, particularly in the technology sector, coming in this week. And then next week will be loaded by Facebook, by Amazon, by Apple. I believe Tesla is a little bit further out. We got Microsoft, we have Intel. So we have quite a bit to go yet. That's going to affect the prices of the S&P, because of the tech companies that the S&P shares with the NASDAQ. That's going to be it for today. Next update is Thursday, the 22nd.